Hi everyone, very good afternoon and welcome back to CAIIB by CGB Mentors. So over here we are going to discuss today the MCQs of working capital finance and term loan, right? We will be focusing on numerical part in this particular session because in one of the earlier sessions we have covered the theoretical part, right? So let us start talking about it. Number one, we have working capital cycle. So a manufacturing company has given you details, raw material storage, WIP, finished goods, accounts receivable and accounts payable payment period, right? So these are the days which the company takes in order to convert its raw material into finished goods, right? And the selling procedure, everything is involved over here. There is an additional information that they have given you that the company decides to reduce its raw material storage by 10 days. कहा है कि हम आपका रॉ मटेरियल स्टोरेज जो है वो 10 दिन से कम कर देंगे एंड इम्प्रूव इट्स अकाउंट रिसीवेबल कलेक्शन पीरियड. देखो इम्प्रूव का मतलब यहाँ पे क्या है? What do we mean by improve over here? It again means that there will be a reduction, right? There will be a reduction. You have been asked about the new operating cycle. There is change in this, right? And then there is change in accounts receivable as well. Now this period would be, this would be shortened, right? Why it will become short? Because obviously you have improved. So this improve word is the only thing that can trick you, fine? So net operating cycle is raw material plus WIP plus finished goods plus receivable and less payables. Fine. Original cycle was like this, and new cycle you will deduct from your raw material, you will deduct from your receivables, right? And finally you will deduct the outstanding as well, and that will give you the new cycle of 70 days. Fine. Now next we have turnover method with some constraints. So it says that a business projects a turnover of 12 crore. Okay, fine. So that means we have to give the working capital finance on the turnover itself. ठीक है, हमें working capital finance turnover पे ही देना पड़ेगा. Using the turnover method, calculate working capital requirement, borrower's contribution as net working capital, and the bank's contribution. Now the borrower has some amount in the unutilized term loans. ठीक है, borrower का कुछ पैसा unutilized है, मतलब कि पहले they might have taken some term loan and in that money is unutilized. So they are saying how does this affect bank's contribution? बैंक के contribution को कैसे impact करेगा? Let's see the solution. So working capital requirement, what it would be? 25%. Just wait a moment. What would be the requirement? 25% of 12 crores. Now imagine over here, see the situation. 25% of 12 crores, this is the working capital which is required. Now what is the amount borrower will contribute? 5% of your turnover, that is 60 lakhs, right? What would bank contribute? Total requirement less the contribution by the borrower. So that means eventually bank has to give 2.4 crores. Now whether borrower has unused funds or he does not have unused funds, it doesn't matter, right? It no way it impacts the bank's contribution. किसी भी तरीके से ये बैंक के contribution को impact नहीं करता है. Fine. Then you have another question. MPBF core current assets adjustment, right? MPBF core current asset adjustment. So a company provides the following data, that is total current asset is 450 lakhs, core current asset 100 lakhs, current liability 180 lakhs, right? This method, third method means core current asset adjustment method. Here they have asked you calculate the bank contribution if the borrower's contribution is 25% of the real current asset. In this method, obviously the bank wants that the borrower should contribute 25% of the real current assets. And if you will see out of the three methods, this is the most conservative method. ये सबसे ज़्यादा conservative method है. ऐसा क्यों? Over here, bank removes each and everything and then finds out that what is the amount bank needs to contribute. Fine. So let's see this. See, number one, we need to find out real current assets. How shall I find out real current assets? So your total current assets less core current assets. Total less core. What do we mean by core current assets? Those which are always going to remain invested in the business. For example, your machinery. ठीक है, ये हमेशा आपके बिजनेस में इन्वेस्ट रहेगी. What is opposite to this? Debtors, right? It will keep on fluctuating. It will keep on changing. So yes, my real current assets 450 lakhs less 100 lakhs is equals to 350 lakhs. 450 में से 100 आप हटा देंगे, 350 लाख. Now what is the working capital gap? I have found out my real current assets. I'll deduct current liabilities of it. 350 lakhs less 180 lakhs, which was my current liability. This is the working capital gap, right? I need the funding for this. Now they say borrower will contribute 25% of real current asset. 25% of real current assets, right? So eventually it would come to 87.5 lakhs. कितने पे आ जाएगा? 87.5 lakhs. This is borrower's contribution. This is borrower's contribution. So what is going to be the contribution of bank? Bank को कितना contribute करना पड़ेगा? What is working capital gap? 170 lakhs less 87.5 lakhs gives you 82.5, which needs to be the contribution of bank. ठीक है, आपके बैंक का ये contribution होगा. Next I have cash budget method. Over here it's a very simple question, pretty easy. Seasonal business, right? And you have been provided with monthly cash deficit. January, February, March, April, May and June. So over here, which month has got the highest cash deficit? कौन से month का सबसे ज़्यादा है? This is your 40 lakhs, right? If the business decides to maintain a buffer of 20% above the peak deficit, they are saying that we need to maintain a buffer of 20% over peak deficit. What is the total working capital limit financed by bank? I hope this is so easy to solve. They are simply asking you peak deficit and a buffer of 20%. And a buffer of 20%, right? So that is why it would be 48 lakhs. Now, factoring with multiple invoices, let's see this. So an SME sells 3 invoices to a factor under the following terms. Invoice 1, 50, invoice 2, 30, invoice 3, 20 lakhs. The factor charges advance percentage 80%, discount fee 2%, interest rate 12% on the advance amount. Obviously, what he will charge would be on the amount that he has given. How much amount he will give? 80%. What are the total of 3 invoices? That is 100 lakhs. ठीक है. So now, what is the remaining balance that needs to be paid to the SME आफ्टर मेच्योरिटी? ठीक है, मेच्योरिटी के बाद में आपको कितना जो है टोटल अमाउंट देना पड़ेगा. So basically what you need to do in this particular question is, first of all, discounting fee is the 2% of the invoice value. So we know that 100 lakhs is the invoice value multiplied by your 2%, that is 2 lakhs. That is so your discounting value. ठीक है, this is your discounting fee. Let me write it over here. This is the fees. Now what about the interest charges? यहाँ पे आपके interest charges क्या होंगे? See, 50 lakhs. Over here you have to calculate the interest rate. How am I going to calculate this? 50 lakhs multiplied by 12% per annum, right? Multiply it with 60 divided by 365. इतने दिन के लिए आप करेंगे. Next is 30 lakhs multiplied by 12% into 90 divided by 365. Then similarly 20 lakhs multiplied by 12% for how many days? 120 days you are doing so. Basically now what you need to do is, see, out of 100 lakhs you have already paid 80 lakhs, 80% amount you will pay, fine. Then you will deduct your discounting fees, that is 2 lakhs, less you will deduct the interest cost that will come in these three. So basically what is the amount I will pay after maturity? 100 lakh was the total invoice value. Out of that I have already paid the 80% to the SME, already given 80% of the amount. I'll deduct my discounting fees, right? Then I'll deduct interest portion by calculating these three and adding them up. इनको add करके, and that would be the amount I'll return back to the SME. वो अमाउंट मैं SME को वापस कर दूंगी. फाइन. Now next is forfeiting with currency fluctuation. So an exporter sells a bill of exchange worth 1 million euros to a forfeiter. Discounting rate 8% per annum. Okay, maturity 1 year. Exchange rate at sale is this. Exchange rate at maturity is this. So now what is the effective cost of financing? That is what you have to calculate considering the currency fluctuation. So discounting amount kitna hoga? 1 million euros multiplied by 8%. Okay. So out of 1 million euros, if I deduct this, what am I getting? 920,000 euros. Okay. Now over here, let me convert this into INR. This was the exchange rate at the time of sale. So eventually I'll get 82.8 crores. Now maturity value is 1 million euros multiplied by 95 crores, right? So what is the effective cost? 95 crores less 82.8 divided by your base value, that is 82.8 multiplied by 100. So 10.2% is your effective cost. ठीक है, ये आपकी effective cost है for getting this discounted. Okay. Now next we have an Indian company imports goods worth $1 million under supplier's credit. Benchmark is LIBOR 2%, spread 250 BPS, maturity 1, exchange rate given. Now you have been asked what is the all-in cost percentage term. बहुत ही simple सा सवाल है. 2% plus 2.5, that is BPS, that is spread. So 4.5 is your all-in cost in percentage term for getting this particular financing. ठीक है, इतना आपका जो है financing का खर्चा हो गया. Next, I am having commercial paper with stamp duty. Over here, they have asked you what is the issue price of commercial paper. If the face value is 1 crore, discount rate 10%, maturity period 90 days, and stamp duty is 0.01% of the face value. See, discount amount आपका कितना होगा? 1 crore, 10% for 90 days, 2.47 lakh. Stamp duty 1 crore, 0.01%. So you have calculated your total cost. Now the issue price is, this is the maturity value. Deduct both of these and you will get your issue price, that is 97.52. Right, this is the eventual total cost that has been incurred by this is the amount that you will have in hand, and this is the total cost which you have incurred. Now in case of bank guarantee, a contractor requires a performance guarantee. Just wait for a second. Yes, So a contractor requires a performance guarantee for a project worth 5 crores. Bank is charging guarantee fee and there's a margin requirement as well. So what would be the total cost of guarantee for the contractor? देखो guarantee fees आपसे पूछी है, margin requirement कितनी है 1.25 lakhs, right? And 0.5% you have to give for the guarantee as well. So this is the eventual cost that as a contractor you have to incur. ये आपके बैंक के charges हैं. Over here there is a bit changes. See, this particular question is not complete. You have to focus on this only as of now, because along with the margin requirements, you have to give certain other factors also to what you can say add in or to find out the cost, right? So there is some few things missing over here. So in this particular question, as of now, the guarantee fee is the only cost that you need to incur. Now talking about the working capital gap with complex adjustments. So we have to calculate this. You have been provided with the total current assets, core current assets and the current liabilities. This is exactly the similar kind of question. Just one thing, that bank has imposed a contingency buffer of 10%. Contingency buffer of 10% का मतलब क्या? Over here, we analyze that your working capital gap is 180 lakhs, but we will add 10% more. That means we assume that you will require a working capital of 198 lakhs. So this is the adjustment. You have to understand that we can add some buffers also in this. हम कुछ buffers भी यहाँ पर add on कर सकते हैं. Borrower's contribution, again this would be the similar kind of calculation which we have already done. DPG risk weight कितना होता है? So a bank has issued DPG for 5 crores, deferred payment guarantee. Guarantee is unsecured. Bank's total guarantees cannot exceed 15% and bank's current unsecured guarantees are 10 crores and the capital is 100 crores. Obviously, so over here, are you exceeding anything? No, 15% your limit. Your capital is 100 crores. That means ultimately how much you can issue? 15 crores. Right now, what do you have? What you have already issued? 10 crores. So you are issuing 5 crores more. That is within the limit, right? This is within the limit and you can issue that. Partial credit enhancement. So a bank has provided a partial credit enhancement for corporate bond issue. ठीक है, बैंक ने ये provide किया है. Now if the bank bonds rating improve, ठीक है, अगर bond की rating improve हो जाती है और उससे risk weight कम हो जाता है, तो what would be the reduction in capital requirement? कितना reduction हो जाएगा? See, obviously if your ratings have improved, you have to keep lesser capital. अभी आपका कितना था? 150% risk weight, right? Multiplied by 9% capital requirement of 50 crores. So this much capital you had to keep invested. New risk percentage 50%. So this much multiplied by 9%, 50 crores, 2.25 crores, right? So what is the reduction in your capital requirement? 6.75 less 2.25. That is your answer. Now DPG risk weights कितने हैं? So as per RBI guidelines, DPGs are assigned a risk weight of 100%. Now there is a calculation of balloon payment. Okay, so there is a loan of 10 lakhs. It is repaid in 12 equal monthly installments of 50,000. Fine. With a balloon payment at the end. तो अगर आप 50,000 12 equal installments में pay कर रहे हो, तो eventually you are paying how much? 6 lakhs, right? So at the end you have to make a higher payment of 4 lakhs. आपको 4 लाख की payment करनी पड़ेगी. Now there is a partial credit enhancement of 2 crores for a corporate bond issue of 10 crores. Fine. If the bond defaults, then what would be the bank's liability? So over here, bank's liability would be 2 crore, right? 2 crore would be the amount for which the bank would be responsible. Now next we have takeout financing. So a bank lends 50 crores for an infrastructure project. After 5 years, IIFCL buys the loan under the takeout financing. What is the primary purpose? See, takeout financing helps in the asset liability mismatches, right, for the banks, and that is why these infrastructure projects, they are for long term, and the deposits that the bank has is for short term. So in order to remove this anomaly, the banks do, the IFCL has bought this, and this is called as takeout financing. So it is beneficial in that particular scenario. This is it in this particular class. Thank you so much for joining in.